Good afternoon and welcome to GrainTV. Today's March 23rd, 2012. I'm Logan Burgess. To my right is Cody Bills. Cody, the big drivers in the grain market this week. U.S. winter wheat conditions are on the up and up. We see Texas, Oklahoma, and Kansas with significant better crop condition than what we saw at this time last year. Brazilian soybean production was once again downgraded. That kind of lends credit to this fundamental rally that we've seen here as of late in the soybean market. And we had a mixed export sales, specifically for soybeans, coming in well low of trade expectations. Can you kind of take us through what we saw there?
Yeah, the export sales, we came in around 357,000 metric tons. People were expecting a lot more than that, and so we saw the soybean contract sell off a little bit at the beginning of the day. But if you put it in the model here, you can see our soybean sales in the last 4 weeks have just been phenomenal. And coming in a little bit low 1 week isn't a game changer here. And even though we came in slightly below expectations, we finally went positive here in terms of the pace that we need to meet USDA expectations. So for the first time this entire marketing year, we went positive in terms of the fact that we are ahead of pace to meet USDA expectations.
Certainly, Cody. Well, how do we see it kind of play out in Chicago here? Well, we did see the grains kind of take a breather here. Soybeans really on a run as of late on the heels of those excellent export sales that we've seen in the last 3 to 4 weeks, as you mentioned before. Corn, the leader to the downside, down 26 3/4 cents on that May contract. Kind of interesting to note here. Last week, grains were way up across the board, and we really saw those new crop contracts lag behind those old crop contracts, specifically for May delivery. As you can see here, kind of a different story. New crop actually sustained smaller losses than what those front months did this week, so that's kind of interesting to note here. Another big thing that people are watching, a big ratio right now, is that November soybean delivery, December corn delivery spread. As you can see from the chart here, taken from FireTip, we're now sitting at 2.37. That's the highest that this ratio has been since February 2011.
Yeah, why do you think this is happening? Why do you think it continues to rally in the last couple of weeks?
I think initially it was rallying as export sales and beans were really taking off. People were thinking that maybe that new crop contract was undervalued with respect to corn, obviously. But now recently, with the potential for early planting here, it really seems like a lot of acres, specifically swing acres that may be soybean acres, are going to be going toward corn. A lot of producers I've been talking to, they're saying corn is king. They're putting corn in the ground. So maybe people say we need to give these bean farmers a little bit more of an incentive to plant some beans here coming up soon.
That makes sense. So basically the weather conditions are favoring corn in terms of planting, and as a result people are getting a little bit nervous and buying these new crop beans.
That well could be. That well could be.
All right. Well, we're going to take a quick commercial break. When we're back, we're going to talk about what we're seeing in the cash market, especially when we're talking about selling in September and trying to capture that premium for that early planting.
GrainHedge is more than just futures trading. Clients receive our cash grain optimizer showing spot and forward bids within 200 miles of your farm. We take into account your trucking costs to find your best selling opportunity. We provide in-depth basis mapping, historical basis and cash price charting. Every day we show you your best price and if it meets your profit goals. Contact GrainHedge today to get started.
And welcome back to GrainTV. Cody here at GrainHedge. We have a wealth of cash market intelligence. I know that you looked at some premiums between a September and an October cash delivery. Can you take us through what we're seeing here?
Yeah, it seems like the theme in the market right now has been a lot of talk about the weather being very positive, people being able to get out and plant early and maybe even capture that September premium instead of delivering in October or November when they typically would. I figured what we do is we just quantify this in terms of the national average September cash price, and then we'd subtract out the national average September or October cash price, and we look at the premium here. What farmers are going to be getting paid if they deliver in September? And right now we're sitting at about 38 cents. So you're going to be compensated about 38 cents on average across the U.S. To deliver that September corn.
Yeah, looking at this chart here, Cody, it looks like last year we saw that premium for September delivery get as high as 60 cents. Do you think that the potential lays this year to see 60 cents once again?
Yeah, I think that the spring is set, and I think that it's a very big possibility that we see premiums move back up to 60 cents at some point. I mean, just think about it. The conditions here, we could have a huge corn crop in the fall, so that's going to weigh on new crop prices. And of course, we have very short stock, shorter than last year even, in the old crop. So I think that really is the right type of scenario to see that 60-cent premium early on in the summer. Now, there are risks if you're trying to go out there and sell some September corn.
Yeah.
One for me is the forward contract risk. You know, how are you going to lock in this premium? And if you do lock it in using a forward contract, what if that early planting, what if we get a late freeze or even a typical freeze? That may hurt your crop when it's emerging, and you may not be able to get your hands on the grain in September when you need to meet that forward contract obligation. So that's one risk. The other is we're going to be planting potentially, forecast right now about 95.5 million acres.
Yeah.
So the possibility of not being able to get your hands on seed if you have to replant is a serious concern. So there are risks out there. You may have to dry your corn. You may take a yield drag planting the earlier variety. So there's a lot of risks out there. You need to make sure that this 38 cents is really going to compensate you for the risks you're taking on.
Yeah, certainly. Well, if you have a question about kind of the cash market situation we just outlined here, certainly give us a call at the office here. We'll walk you through that. Kind of turning over to Fire Tip here. Let's take a look at what we saw in today's action. As you can see here on the Fire Tip platform, we saw May corn trade higher 1 3/4. Actually, watching corn right into the close there, it was trying to go negative, but buyers came in and said, no, not on this Friday afternoon, buddy. So we traded back up to around 646 1/4. Beans up 17, the leader to the upside, and wheat up 8 to 10 here. Can you kind of take us through a May corn chart that we're looking at right now?
Yeah, right now we're looking at a daily May corn chart, and you can see there's some serious resistance up here around 676 area. I talked earlier this week, actually in late last week, that we could find support right around the 640, and 640 held up corn prices like Atlas to the world. We'll see if it holds. We'll see if it holds next week. But if through that, I think there's a good chance we could move down around the $6. But once again, focus on 640. If we hold next week, we might be able to even move higher back up to that 670 area in that range.
Obviously, to keep on your radar right now, next Friday, March 30th, the big day here. Planting intentions reports coming out. We've seen Informa drop the number 95.5 million acres, as you were saying. If we see a big down move tomorrow, where's kind of the downside objective? You see $6 holding?
Yes, I think $6 should hold, at least for the short term. $5.90 to $6. That's the support area down here.
Yeah, certainly. This is old crop as well that we're looking at here. Obviously, a large acreage number out of that Friday report is really going to be hammering on that December contract. as well.
For sure. Well, that'll pretty much wrap up what we're talking about here this week. If you have any questions, give us a call 877-472-4607. We'd be happy to answer any questions you have. Maybe even spend some time looking into the cash market in your area and see if that September premium is better than the nation's average.
Right. Have a great weekend.